Hello, everyone, and welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So, thank you guys for joining. Shout out to Nyambura Ndongo for being the first to join and comment. Hello, Paul Kerry, good morning. So today we'll be talking about the top market events that are expected to be moving the markets this week. So there's quite a number of things. One, we already have at least 5 central banks that are bound to make major interest rate decisions this week. So that's expected to be the key mover in the markets, and that also explains the current sideways momentum that we have already seen in the markets since last week. So just in case if you didn't notice, a majority of markets were moving sideways. So this week, we'll be expecting to see some good moves, some high or increased volatility. And with increased volatility comes more trading opportunities as well as increased risk in the markets. So good morning, Matilda. You can see Ibzan, Edwin Wangari, and Charles Palmer. Thank you guys for joining. So as always, I'll begin with a disclaimer that this session is not investment advice. It's not a recommendation to trade. So you should always do your own due diligence. So let's get started by looking at the economic calendar. And as you can see, there's quite a number of things that we're expecting in the markets this week. So today, being Monday, the 17th of March, first, we know that we had retail sales and industrial production data coming in from China, as well as fixed asset investments, all of which performed better than expected, with industrial production being up 5.9% compared to the expectation of 5.3%, but slightly below the previous reading of 6.2%. So retail sales were up 4%, an increase from the prior 3.7% and better than the expected 3.8%, whereas fixed asset investments were up 4.1%. This is better than the expected 3.2%, which was the same as the previous reading. So from here, the only negative data point we had from China was the unemployment rate, which increased to 5.4%, up from 5.1%, and better than higher than the expected 5.1%. So going through the day, the main focus of the day will be on the US. So at 3:30 p.m. We'll basically be looking at the US retail sales. So in the previous reading, we had such a huge drop of negative 0.9%. And now we're expecting that the US economy turned to the positive in the month of February. So in this case, we're expecting a 0.6% increase. So as for core retail sales, there was a big drop of negative 0.4%. We're expecting an improvement, an increase of 0.3%. So as we all know, retail sales tend to be a key measure of consumer spending. So when retail sales are doing well, it means companies are selling more and more people have more money to spend. And as a result, it's a positive indicator of economic performance. So on the other hand, if we have much weaker retail sales, then it means consumers don't have much to spend and businesses are not making as much sales. So in that view, it's a measure of economic and consumer strength. So it tends to be positively correlated with the dollar, where a higher retail sales tend to be more positive for the dollar, whereas on the other hand, weaker retail sales tends to be negative for the dollar. So in correlation to the Fed's policies, we know that the Fed also observes the retail sales level in the economy. So when there is increased retail sales, it basically means that consumers have more to spend, and in that case, they tend to push prices higher. Remember, if more people have more money buying more stuff, prices tend to naturally accelerate. And in that case, the Fed tends to hold rates higher for longer, which is a net positive for the dollar. On the other hand, weaker retail sales show weakness in the economy. As a result, they don't pressure prices high. In that case, the Fed might consider cutting rates. So in that case, if we happen to see a level that is higher than 0.6%, this could be a big boost to the dollar. But then if we get levels below 0.6%, then it could weaken the dollar index further. So going on for the rest of the week, we'll be having CPI from Canada, where for trimmed CPI, we are expecting a slight increase to 2.8%, up from 2.7% in January. Then fast forward on Wednesday in the morning, we'll be expecting the Bank of Japan to maintain its policy rate or interest rate at 0.50%. So we don't expect much of a change, but the Bank of Japan has already promised that they could be looking at a further rate hike in the month of May. So for now, we expect the Bank of Japan to be holding rates steady. So key focus on Wednesday will be on the Bank of Japan press conference, as well as the monetary policy statement, where investors will be looking for hints that the Bank of Japan could go for a rate hike in May, and that could be the key driver in the markets. So we'll also be getting the inflation data from the Eurozone, where we expect that the final cost CPI is at 2.6% for the month of February in the EU, and final CPI at 2.4%, slightly lower than the previous 2.5%. So we'll also be getting the EIA crude oil inventories at 5:30 p.m. on Wednesday, before we turn our focus to the Fed interest rate decision. So the federal funds rate in the US is expected to be held steady at between 4.25% and 4.50%. So there is an overall expectation that the Fed will not be cutting rates on this meeting. So key focus will be on when they will be cutting rates. So we get the Fed dot plot every 3 months, and in the last time we had the Fed dot plot, we had anticipated 2 more rate cuts this year. So during this meeting, which will be starting on Tuesday, and then the press conference will be on Wednesday, we will be expecting to see another Fed dot plot. So the dot plot is a anonymous submission by Fed members, where they basically share their dot plots, indicating their overall expectation of monetary policy in the next couple of meetings. So in this case, we will be looking to see if there's any changes to the dot plots, and as a result, we will try to react to that information. So we'll be getting a summary of economic projections, as well as a FOMC policy statement. Then later on at 9:30 p.m., we'll get the FOMC press conference. And of course, this is expected to be the biggest event for US dollar traders this week on Wednesday at 9 p.m. So clearly, this is expected to be quite a volatile week. So notice that from Wednesday morning, we get the Bank of Japan policy decision, more volatility in JPY pairs. Then in the afternoon or in the evening, we get more volatility from US dollar pairs. Following day on Thursday, we get the job market report from Australia, where we're expecting unemployment to stay the same and the number of jobs created in Feb to be much lower than January's, from 44K down to 31.4K. Then we get an interest rate decision from the People's Bank of China. In this case, we don't expect much of a change. So for the 1-year loan prime rate, 3.1%, and for the 5-year, 3.6%. Then fast forward, we get the claimant count change, or the unemployment claims from the UK. Then in the evening, we get yet another central bank rate decision. So this is expected to be the big surprise in the market, where the Swiss National Bank is expected to cut rates from 0.5% down to 0.25%. So that would be a 25 basis point rate cut, followed by SNB press conference at 12 p.m. So of course, this is expected to be a big mover in the market. And as we have already seen for the better part of last year and early this year, traders and investors alike have been reacting to policy decisions ahead of time. So in this case, we might not expect the Swiss franc to be weakening on the exact day of announcement on Thursday. So Monday, Tuesday, Wednesday could be seeing investors shorting the Swiss franc way before the rate cut happens. So then we get to 3 p.m. on Thursday, where we get yet another interest rate decision. And in this case, it's the Bank of England, where it's expected to maintain interest rates at the current level of 4.5%. However, a key distinction for the Bank of England is that we're expecting to see a major shift in how the voting happens. So in the last decision to maintain rates at 4.5%, all the 9 members had voted to hold rates at the current level. However, in this case, we're expecting a major shift in how the voting happens. So you can see here we are looking at 0 to 7. So the XX format is quite unique for the UK, where the first number is how many MPC members voted to increase interest rates. So in this case, we expect the number to remain at 0. So nobody in the MPC or the Monetary Policy Committee in the UK is looking to hike rates. However, we're expecting a shift of 2 votes. And in this case, this is the second number, or how many members voted to decrease rates. So we're expecting 2 members from the Bank of England Monetary Policy Committee to vote for cutting rates, while a majority still remain in holding rates, that is 7 members. So that's why we have an overall expectation of holding rates at 4.5%. So we'll also be getting the Bank of England inflation letter, the monetary policy summary, and of course, later on a speech by Bank of England Governor Bailey. So weekly unemployment claims from the US will be released at 3:30 p.m. together with the Philadelphia Fed Manufacturing Index. Then later on, we'll get a speech from Bank of Canada Governor Markle. So fast forward Friday, we get the core retail sales from Canada, as well as the Canadian retail sales overhead. So clearly, it will be quite a busy week, right from today all the way through to Friday. So how should you approach trading as per this week? So on one side, if you like markets that are volatile, then this might as well be the week to be focusing in the markets, because you'll be seeing increased volatility. So also, it's important to note that on Friday last week, gold hit a new all-time high of above $3,000 per ounce. So also, another key point to notice is that last week, the SP 500 officially entered the correction territory, having dropped by over 10% from its most recent high that we had seen in January. So that basically gives you the setup for the week. Those are the fundamentals we're expecting. So we'll also be doing some technical analysis. But before we move, let's look at some further fundamental analysis things to be expecting. So one, the US-EU tariff crash imperils 9.5 trillion of business, AmCham warns. So the US-European tariff conflict is jeopardizing transatlantic business worth $9.5 trillion annually, the American Chamber of Commerce of the EU warned on Monday. So the AmCham EU, whose more than 160 members, which include Apple, ExxonMobil, and Visa, showed in its annual Transatlantic Economy Report a deepening relationship hitting records in 2024, such as goods and services worth $2 trillion. So it talks of 2025 as a year of promise and peril for the world's largest commercial relationship. So as of last week, we know what happened. Trump, on his analysis, realized that the EU countries had put a tariff on American bourbon whiskey, and as a result, he promised 200% tariffs on EU wines and spirits. So that escalated out of things, with the EU promising to implement counter tariffs, which led to a major sell-off in EU as well as US equities. So we'll be looking further to see what will be the key developments in the markets this week, as Trump is set to issue a speech this week. So sorry, I wasn't sharing this. So US and EU tariff crash imperils 9.5 trillion of business. So Trump will be making a big speech later this week. So Trump says no exemptions on US steel and aluminum tariffs. So US President Donald Trump said he has no intention of creating exemptions on steel and aluminum tariffs, and said reciprocal and sectoral tariffs will be imposed on the 2nd of April. So last month, Trump raised tariffs on imports of steel and aluminum to a flat 25% without exemptions or exceptions, in a move that was designed to help US industry while contributing to an escalating trade war. So just if you haven't checked yet, the biggest exporter of steel and aluminium to the US is Canada. So that's why we are seeing the Canadian currency being that much hammered by these Trump's tariffs. So outside of that, Trump says he will speak with Putin on Tuesday about ending the war on Ukraine. So US President Trump said he plans to speak to Russian President Putin on Tuesday and discuss ending the war in Ukraine after positive talks between US and Russian officials in Moscow. So we want to see if we can bring that war to an end, Trump told reporters on Air Force One during a late flight back to the Washington area from Florida. Maybe we can, maybe we can't, but I think we have a very good chance, said Trump. So I'll be speaking to President Putin on Tuesday. A lot of work has been done over the weekend. So Trump is trying to win Putin's support for a 30-day ceasefire proposal that Ukraine accepted last week as both sides continued trading heavy aerial strikes through the weekend and Russia moved closer to ejecting Ukrainian forces from their months-old foothold in the western Russian region of Kursk. So there was no immediate response from the Kremlin to a request for comment from Reuters. So the Kremlin said on Friday that Putin has sent Trump a message about his ceasefire plan via US envoy Steve Witkoff, who held talks in Moscow expressing cautious optimism a deal could be reached to end the 3-year conflict. So clearly, with more speeches expected from Trump, it's not just the economic calendar that will be moving the markets, but also any updates from the current US President Trump. So outside of that, China retail sales pick up as Beijing looks to consumers to ease US trade pressure. So just so you understand, what are the key highlights this morning? China industrial output growth topped estimates. We have already seen that on the economic calendar. So China retail sales growth accelerates in January, February, and China new home prices fall for the least in a record 8 months. So with that in mind, China's retail sales growth quickened in January, February in a welcome sign for policymakers' efforts to boost domestic consumption, even as joblessness rose and factory output eased, underscoring the strains of an economy facing fresh US tariff pressure. Policymakers have put expanding domestic demand as the top priority this year as they try to caution the impact of the Trump administration's tariffs on its crucial export engine. So what we are seeing from China is quite a big change or shift in policy that was much expected. So China has announced a plan to vigorously boost consumption in bid to shore up the economy. So China announced a special action plan to boost consumption on Sunday in a bid to prop up domestic consumption in the world's second largest economy. So in terms of dollars, trying to skim through the article, China leaders also pledged at an annual parliamentary meeting in January an additional $300 billion, yuan, or $41.5 billion of ultra-long special treasury bonds for consumer subsidy support. So with the current move from China, it shows that there will be more money flowing into the Chinese economy to support local consumption. And that basically means that we expect Chinese companies to be selling more. And that may explain why we have a strong rally in Chinese equities. And in fact, if you look at their indices, it's the best start to a year ever. So outside of that, now we look at a summary of the key expectations for the week. So here, a Fed meeting and retail sales data greet a failing stock market, what to know this week. So last week, the SP 500 was down 2.3%, Dow Jones dropped 3%, or more than 1,300 points, and the tech-heavy Nasdaq fell about 2.4%. So on Thursday, the SP 500 officially entered a correction as the benchmark index fell 10% from its record high on February 19. So in the week ahead, the Fed and the health of the US economy will remain top of mind for investors. The central bank is largely expected to hold rates steady when it announces its next monetary policy decision on Wednesday. Markets will focus on any clues about when the central bank could cut rates again. So Monday's release of February retail sales is set to highlight the weekly slate of scheduled economic data releases. And on the corporate front, quarterly results from Nike, FedEx, and Micron after the bell on Thursday will be closely tracked. So a patient Fed, the recent sell-off in stocks has coincided with growing market fears about slowing economic data, pushing investors to price in roughly 3 interest rate cuts from the Fed in 2025. But with inflation still above 2% target and possible impacts from Trump administration's tariffs and other policies, potentially boosting price increases further, the Fed is widely expected to leave interest rates unchanged this Wednesday. So key to watch will be the Fed's latest summary of economic projections that includes the dot plot, which maps out policymakers' expectations for where interest rates could be headed in the future, as well as the commentary from the Fed chair, Jerome Powell, during his press conference. So in the last dot plot, we expected rates to be within the range of 3.75% to 4%, which would reflect 2 25 basis points cuts this year. So also on Monday morning, investors will get another look at whether January's 0.9% decline in retail sales was the start of a slowdown in consumer spending. Economists expect a rebound in February's numbers, with consensus estimates projecting retail sales to rise 0.6%. So that will be a key decision this week. So you can see the big drop that we saw in January, and now we are expecting a positive jump to 0.6% on the higher side. So on the stock market side, we are seeing it's still a Magnificent Seven market, meaning that the Magnificent Seven stocks still dominate the SP 500. So from a chart here, you can see the weight that they have. So far, the weight on the Magnificent Seven is still 30.8%, compared to the other 493 companies that take 69.2%. So the Magnificent Seven, or the top 7 tech stocks in the US, Nvidia, Google, Amazon, Facebook, Apple, Microsoft, are all off about 20% from their 52-week highs, with Tesla being down nearly 50%. Still, the combination of stocks makes up about 30% of the SP 500's market cap, not far off their mid-30% peak weighting seen in 2024. And as recent market action has shown, their direction remains critical to where the market heads next. So for the market to go higher from here, you need to see the broadening thesis happening. So the broadening thesis is basically a scenario where we see the gains in the SP 500 not just coming from the top 7 stocks or the Magnificent Seven, but then more stocks contributing widely to the performance of the SP 500, meaning that we see more returns coming from smaller companies in the SP 500. So if that happens to be the case, then it could be having a healthy market rally. But as long as the performance of the market is dominated by the top 7 companies, then if the top 7 companies are currently going back in terms of price action, then that could have an overall impact on the broader index. So in this case, we need to see better earnings from smaller companies driving the SP 500 growth. So we have already gone through the weekly calendar. So what you haven't checked is the earnings calendar. So for Monday, we don't have any earnings that are key highlights. But then on Tuesday, we'll be starting with Xpeng. Then on Tuesday, we'll be looking at Five Below, General Mills, Signet Jewelers, and Williams Sonoma. Then we'll be getting more increased earnings on Thursday, where we look at the Academy Sports and Outdoors, Darden Restaurants, FedEx, Lands End, Lena, Micron, and Nike. And then on Friday, we'll be looking at the Carnival Corporation earnings as well as Neo earnings. So that's it on the fundamental side, and I believe now we can jump straight to some technical analysis and try to understand where the markets might be headed next. So as usual, if you have any questions relating from the presentation, make sure to raise them and I'll be responding to those questions as we go. So to those who are new, this is called the MetaTrader 5 trading application. This is the app that we use for trading. So on a desktop, we use the MT5, and on a mobile phone or a smartphone, we use what we call the Equity Trader by FXPesa app. So clearly, last week, a majority of markets were on a sideways momentum. So I'll try and show you from the majors. And as you can see, this is Euro USD, a currency pair that had been on a very strong bullish momentum. If you look at the daily, it was a very strong bullish momentum. But then if you look at the summary of last week, the last 5 days, then it was more of a sideways momentum, meaning that the Euro USD was neither going up or down. This was the overall trend. So this happens often, especially when you have a Fed rate decision coming up. So you'll see the market reducing in volatility and then jacking up the volatility after the rate announcement. So in this case, the Fed might lead to an eventual breakout in the Euro USD pair. So clearly, for today, we remain patient and wait to see if there will be any form of breakout. So on the 15 minutes chart, we haven't had much of a price action since the market opened. So we remain patient and wait for volatility to come right back in. So far we don't have that yet. So we remain patient. If you look at pound USD, it was also in some form of consolidation, slightly bearish, I would say, in the last 3 days of last week. But now we are seeing some hopes of the market breaking out towards the upper side. That hasn't happened yet. So as always, whenever you have such scenarios, we remain patient. So you look at AUD USD, following the strong gold momentum last week, we have seen a very strong start to this week. So clearly, we had to receding, I would call them, highs from the last 2 weeks. And then from the lows side, you can see that the key level support last week was following this path. So eventually towards the end of the week, there was a key level break, and now we are seeing some momentum coming in, which suggests that the market could be headed to the top of the pattern, with more likelihood that the Australian dollar continues to push higher and potentially gets to 0.63636. So that could as well be the play, but as we all know, Monday is usually a slow day, so this could be a very slow grind towards this area. So as for USDN, we know that we have been looking for shorts since the market started showing this strong bearish momentum. So for the last 2 months, it has been a strong sell in USDN. Then for this month, we started quite bearish. Last week, we saw the market recover and push through towards the upper side of the trend line. And now we are retesting a key level area where the market could now start looking for bearish momentum. So here, the idea is to check for evidence of sellers entering the market and then look for short selling positions. That hasn't played out yet. So as I said earlier, we remain patient. So for the Nikkei 225 index, we remember we had this range that we have been following for quite a period now. Then eventually the market broke out towards the lower side, maintained a strong bearish momentum. And in this bearish momentum, we had developed a key level trend line. Then that key level trend line was broken last week on Friday. So what this means is now we are looking at a potential change in market direction, and already from the sequence of lows we experienced last week, you can see that the market is now forming a higher lows each day after day. So that means that after we experienced this price level breakout here last week, then there's a good chance that we could be seeing some pullback, potentially the market pulling back to the breakout point, and then forming some level of continuation here. So that would be a key idea in trading the Nikkei 225 index. That hasn't played out yet, so we remain patient. So gold hit a new all-time high here on Friday, $3,005 per ounce. Then this morning, notice that we haven't moved out of that consolidation. So the overall momentum in gold is still sideways with a slightly bearish momentum. So for now, what we are seeing as the prevailing price action is a swing up, down in these two trend lines. And right now, we are looking at the market moving up, and I don't expect much of a move here. I expect a very small upward trajectory to around 29.89 and then back down up until we eventually have that breakout. So that breakout hasn't played out yet, so we remain patient. So Brent oil has also been moving sideways. You have to learn how to map this sideways momentum. So the key level distinction between Brent oil and these other asset classes is that this morning it opened with a gap. So the closing price on Friday is not the same as the opening price this morning. So attempted to move higher, failed and moved back downwards. So at some point later in the day or later in the week, we should be expecting to see the market close this gap. So bearish trades on Brent oil could be in play. So we just have to be patient and see. So the UT100 or the Nasdaq has been moving sideways, and this is right from Tuesday last week. Now we are seeing a price ceiling at $19,747 per share and a price floor at $19,142. So clearly quite a good number of swings. So we don't have a breakout yet. So we will be expecting to see some form of momentum coming back into the markets. With key trading ideas emerging if the market breaks towards the upper side or even towards the lower side. So we'll be observing this clearly for the week, but in between, I expect the market to remain within pattern. So the range is available on the Nasdaq, but not on the Dow. So the Dow Jones Index was still strongly bearish last week, with a major recovery happening on Friday. So now what we are seeing here is a potential break towards the upper side with a key idea that the market could still get back within the trend. So from what we are seeing on the 15-minute chart, since the market opened, we haven't seen much of a momentum. So yes, there was a slight drop at market open, but then the market has continued to move sideways. So clearly, at some point, we will be expecting to see some volatility in the Dow Jones Stock Market Index. That hasn't played out, so we remain patient. So SP500 are also doing the same thing. We had identified the range early enough, and this has continued playing out. So clearly, with the SP500 moving sideways, we'll be waiting to see some form of breakout later in the week. So having entered correction territory, perhaps we'll be seeing some further selling happening this week. So of course, the Fed will be a key determinant on the direction of the SP500. So key breakouts here would mean that we have nice trading ideas, but for now, we remain patient. So Bitcoin made an inverted head and shoulder pattern, and we put a caveat that bullish momentum will be achieved after a breakout towards the upper side. So this didn't play out, so we expected a further drop here, and then the market recovered, attempted to break to the upper side, which failed, and it has kept moving back downwards in what now looks like an ascending triangle. So we'll be observing closely to see the potential for the market breaking towards the upper side with momentum. That would be a key level trading idea that hasn't played out yet. So as always, we remain patient. So dollar index started slowing its momentum towards the end of the day on Friday. This morning is still moving sideways. So I would say the dollar index is still pretty sideways today. So we don't have much of a momentum. So we'll be waiting for momentum to come back in the markets. New Zealand USD, also a key level mover. So if you look at the daily time frame and clean my chart here, you'd notice that you've just broken above a key level resistance. You go to the 4-hour chart, you zoom out, then you'll notice that this was the most recent high. And the last time we saw price trading above that was all the way back in December last year. So clearly, the Asian pairs are having quite a momentum this morning. So notice it opened with a gap down, started moving higher, and now it's breaking above a key level resistance area, which basically implies the likelihood of further momentum. So in this case, having seen this breakout play out, we'll be observing at the top of the hour to see if there's a continuation. with more likelihood that the market keeps moving higher for the day. So the key two markets you have seen that are moving are both AUD USD and New Zealand USD. So if you're looking for a trade, then it's more likely that the Australian and New Zealand pairs will be the ones. So pound yen made a recovery towards the end of the week last week. So if you look at the daily time frame, you'd notice that this market has been making major swings, but those swings have been getting smaller and smaller, meaning that we are looking at a potential market that is thinning or slowing in terms of volatility. So from the most recent swings, and this is on the daily, then you'll notice that this has been the key level performance, meaning that volatility or the range is getting smaller and smaller. And in such a case, you eventually expect some form of breakout. So if you look at the key level support and resistance areas, judging by last week's price action, then you notice that this is the recent high, this is the recent low, the high of last week and the low of last week. And now you look at the price action today, it tells you that we are approaching the high of last week as a key level test. So as of this morning, from the morning's high, it's more likely that you'll be seeing the pound yen retesting this area here. So also on European equity indices, they made an impressive recovery toward the end of the day on Friday. So having spent the first 4 days of last week in bearish territory, the strong momentum on Friday was enough to convince investors that these indices could be going back into all-time highs. So for the DAX, or for the German stock market index, we had an impressive recovery. This is the all-time high that we had seen 2 weeks ago. And now it seems like after the pullback, the market is headed right back where it started, and that is forming new all-time highs. So for today's price action, I expect some further upside momentum. We have already seen the market rejecting downside price moves. So the long tails on the 3-hour candlesticks on the DAX indicate a rejection of lower prices, which implies that we could be seeing some bullish momentum here. So Spanish IBEX made a very strong run on Friday, the big green candlestick here. So on the 4-hour time frame, this is how it looks like. So clearly a market that is making an impressive recovery. And in the last 2 hours, you'll notice that we have had 2 rejections of lower prices, indicating the likelihood of stronger recovery. So also you have to be on the lookout for this particular trend line here. So the market may be moving higher, but the upside might be limited by this particular trend line. Then we have the France 40, also a market that opened with a gap. It has just closed the gap and might likely continue with a bullish momentum, given the price action that we saw on Friday. So from the 4-hour chart, notice that we had some push towards the lower side, and now we are seeing the market looking to rally back to its all-time high. So the all-time high was formed 2 weeks ago, and now the market is attempting to recover and rally towards that area. So for now, we don't have much of a momentum. Remember, it's Monday, so we should be looking at key levels around 81.09. So for the EU 50 or Euro Stoxx 50 cash index, we had a strong momentum on Friday, indicating buyers are coming back into the market. So from the 4-hour time frame, you'll notice that we literally bounced from the lower trend line here. And now we are looking at a market that is forming or eyeing a new all-time high. And then if you go to the 1-hour time frame, you'll notice that the market has really rejected any attempts to move lower in the last 3 hours, indicating that we could be seeing some further upside potential from the current price action level towards around 54.91 price. So outside of that, Eurocard had a very strong bullish momentum, but over last week, we saw the market erasing some of its gains. So not a very strong close compared to the prior week, indicating that the market may be giving back some of the profits from the buyers. So some form of profit taking could have been happening last week. And this week, we don't have a direction yet, so we remain patient. So China A50 stock market index, a very strong bullish momentum last week, but then this week we are seeing the market erasing some of the gains and pushing further back downwards. So we could be seeing some further selling here, perhaps into prior levels before the market continues with the bullish momentum. So price levels around 13,494 could be in play today as the market looks to pull back some of its gains with overall expectation that the stock market continues with the bullish momentum. So for the HK or for the Hong Kong 50, we saw very strong momentum last week, market closing on a high, but then today as the market opened, there was an attempt to push prices higher which failed. So it's more of a sideways momentum market from Friday evening. So we remain patient and wait to see if there will be evidence of buyers coming back into the market around here. So that's it for the day. I hope you have enjoyed the session. I'm trying to check the comment section to see if there is any questions. So good question here. What does correction zone mean? Is it oversold or overbought regions respectively? So whenever you have a strong bull market, meaning that the price is consistently moving higher, as we have seen in stock market indices, at some point, investors are bound to take some profit. So when investors take profit, this leads to an overall selling, and sometimes it can induce panic. So if the market pulls back, let's say goes down 4 or 5%, we call that a pullback because we still expect the trend to continue. So in that case, we call that a pullback. So if from most recent highs, the market drops by 10%, then that is called correction territory. So correction territory is usually viewed as areas to continue buying into the trend. So when stock market index has gone down by 10, 11% around there, then in that case, we consider that a correction and you'll find more investors looking to buy at lower prices. However, if the bearish momentum continues and the stock market is down over 20%, then that is called a bear market. And overall, investors now start running away from the asset, thinking that now it has officially changed direction and it's now going lower. So correction territory is not a worry area, it's more of an opportunity area. So if Bank of Japan hold rates and leaves them unchanged, how will it affect JPY pairs? So it's not about the Bank of Japan holding rates. The market is already expecting it and the market has priced it in. It's about what the Bank of Japan will project for the rest of the year or for the next couple of their meetings. So if they promise or they suggest that they will be hiking rates further, then that is expected to strengthen the yen further. But then if they are, let's say, cautious and they don't want to be promising the market much, then that will be taken as a softer stance or what we call a hawkish stance. Sorry, not hawkish, but dovish. And in that case, we could be seeing the yen weakening. So a good question. Morning, Rufus. Does the tariff affect the rate cut? So from the last address by Jerome Powell, he said that he will be operating purely based on data. So Jerome Powell is not looking at what Trump is saying. He's looking at what Trump's policies are leading to in the US economy. So if, let's say, Trump makes a big announcement, we're implementing 25% tariffs on all steel and aluminum products, the Fed will not be reacting to that. However, let's say a few weeks down the line, we realize that manufacturing has really slowed down in the US economy as a result of those tariffs, and he has data from the economy, then Jerome Powell has promised to react to that rather than react to what Trump is saying or implementing. So in this case, the Fed policy will be data guided. So good question from Ongari Patrick. USD has been seriously weak. The fear of Trump's session is still making investors cry. Very cautious because Trump's unpredictability continues. What is bound to revamp the USD, or can we expect it to keep weakening? So the only thing that will revamp the USD is either of two things. One is prices, and two is economic performance, and of course there is also the job market. So if inflation is on the rise, that will definitely force the Fed to keep rates high. So an increase in inflation or a sudden increase in inflation would basically strengthen the dollar. So on the other hand, a strong US economy would also strengthen the dollar. But then a spike in unemployment, if we see unemployment spiking higher, that would weaken the dollar further. So if unemployment improves and we get, let's say, values under 4%, then that would mean a very strong job market, which would mean the Fed keeps rates higher for longer. In that case, we would see a strong dollar. However, from what we are seeing, especially from major holders of US debt, major holders including China and Japan, they haven't had an appetite for US debt. So as a result, this is continuously weakening the USD. I think we've already covered USDN. We have also covered our USD. So if Trump successfully ends the Ukraine-Russia war, what will happen to oil prices now that Russian oil can access the European and US markets? Should we expect a further drop in prices? I hope you all remember that the Nord Stream pipeline was bombed. So it's not like somewhere they can go and switch it on back. So oil prices are currently being impacted by other players. So in this case, the end of the war would mean quite a number of things. One, US and EU spending on Ukraine will have to come to an end. And the uncertainties around geopolitics, if there was an index on geopolitics, then I would say the index was highest when we had Israel, Gaza, and Russia, Ukraine happening at the same time. But now, with the elimination of Russia, Ukraine, then the geopolitical index would have been really slowed down. And as a result, the necessity of putting money into a safe haven asset would be removed. So I would expect gold to be the one reacting to this, with gold giving back some of its gains because there is no longer any need to prepare for uncertainty between Russia and Ukraine. So for oil prices, I would be more focused on production versus consumption. And consumption is basically the global GDP, whereas production is the major players, which include the OPEC Plus and the US. So I'd be looking at those dynamics instead. So we have already covered USD yen. What is the London Open and New York Open? And when they close, these changes, especially with daylight saving time, they keep on adjusting. So you can use the Baby Pips tool. Just go to babypips.com and then somewhere on the menu, kindly check under tools. You'll find the Forex market hours. So it's a live tool showing you which session is active and which session is coming. So I'll be posting that in the comment section. I'm afraid today we have gone over almost over an hour, so we'll be looking to end the session soon. So suppose the retail sales data comes out as expected, it will be a big jump from the last reading, but can we see it boosting USD or it's already priced in? So the markets are usually as per expectations. So we try to trade the discrepancy between outcome and expectations. So if it comes as expected, then we don't expect much of a reaction. But if it's bigger than expected, then that could bring a reaction in the market. How do we consume Fed's rate decision in terms of buys and sells in the market? Of course, the Fed's rate decision is expected to be the same, 4.25 to 4.5%. So what we'll be looking to understand is the direction of Fed monetary policy, and that will be getting more light from the Fed dot plot, and of course the speech by Jerome Powell. So it's more about listening to the speech and classifying it as either of two things, whether it's going to be hawkish or dovish. If it's hawkish, then that basically means that we see the dollar gaining some strength. If it's dovish, then we continue seeing a much weaker dollar. Perhaps the dollar index could drop way back to 100. So good feedback here. Hello, thank you guys. Robert and you, 3.5 years now in trading. I can only say discipline is the key to success in trading. Also, what will you say about pound Swiss franc? I think we already discussed these two. We covered pound USD and USD CHF. Remember, pound Swiss franc is a derivative of pound USD and USD CHF. So that's why we don't focus on the crosses. How do you draw the patterns with colors, like the inverted head and shoulder on Bitcoin? Those are a sequence of triangles. If you go to Bitcoin, where is that? So these are triangles. I just come to the triangle tool here. I just draw point number 1. I move to point number 2 and I drag, and I can adjust my triangle where I want. I can move it around. So it's more about basically manipulating your triangle to fit what you are seeing on the markets. So clearly for Bitcoin, here we are looking at a market that is really finding it difficult to break above $84,000. So if you happen to see a break with momentum, then that would be a trade idea. In your analysis, how far do you consider historical data relevant to the current price action to make decisions on the possible direction of price for the day you are analyzing? So it's more like trying to understand the overall trend, and once you understand the overall trend, then you look at the price pattern. So while there's no one solution that fits all, it really depends on what has been happening in the past couple of days. So usually a couple of weeks is enough. You don't have to go all that far back to understand the direction the market is taking. So for instance, if you look at the German stock market index, notice that this is a very strong bullish momentum, and then we had a pullback last week. So now we are looking at a very strong bounce that happened on Friday, likely indicating that the buyers are looking to push the prices higher this week and retest the previous high. So in this case, I'm not considering prices that happened in November last year. But then in some cases, if it's a market, let's say, retesting a support or resistance area, then that might be the case where you look at past prices. Like we looked at, I think it was Eurocard or something. So in some cases, like if you go to the daily time frame on, let's say, Eurocard, you might have to go all the way back to this area here if you're looking for a support area that the market might be looking to test. Also, there is the key level resistance here that we had seen all the way back in August last year. So if the market was coming back down and we don't have candlesticks on the left, then we might have to go back further than we had earlier anticipated. So that's it for the day. Looking any other question I may not have answered. So this is a good one. What is the real meaning of fair value gap, and what is inside there for institution? I would advise you check out our latest podcast where we hosted a trader who does ICT concepts. So it's available on FX Pesa YouTube. So in our latest episode, we hosted 2G Forex or Oscar 2G. Mastering gold trading with ICT concepts and smart risk management. We posted this 3 days ago. So make sure to check it out on how he approaches trading using ICT concepts. Hopefully you'll get to learn something from that one. Gold to 3,200 or 2,800. I wouldn't be that optimistic about gold volatility. I would be more like let's first of all observe what it does around 3,000. And then from there, we'll see what happens. But based on the current price action, I would be more bullish than bearish. given that the stock market hasn't been doing particularly well. So, good question. What is the current Fed's employment target? The Fed is usually mandated to achieve full employment. So, full employment is an unemployment rate that is below 4%. So 3.9 is full employment, 3.8 is full employment, 3.4 is also full employment. So there's no definite number. So that's it for the day. Thank you very much, guys. If you don't have a trading account, make sure to check the links in the description below and register for a trading account. If you are just starting your trading journey and you want to learn, make sure to check out the Novice to Pro series. It's available on the FX Pesa YouTube channel. And once you go through that, hopefully you will understand, practice, gain the skill, and become better at trading. So I wish you guys a happy trading week. And of course, you have to be careful of the news announcements. So every time you wake up and get to your trading desk, so remember to check out the economic calendar, and of course check the social media to see if there's any updates from Trump, because those might be the biggest market movers in the markets this week. So enjoy your day. I hope to see you on the next session tomorrow at the same time, 11 a.m.